Let's bring in fast money friend and media mogul Tom Rogers, former NBC cable president and TiVo CEO. He is now the executive chairman of Engine Media and a CNBC contributor. Tom, always a pleasure to speak with you.
Thanks for having me, Melissa.
In the notes, I see that you think the market is underestimating the risks to this story. Why? 86.8 million subs. That's a huge number for a business that had 0 a year ago.
It does, and they've done a wonderful job with subs. But the sub number there, it doesn't reveal everything. I remember once being on the show discussing Netflix and talking about their prospects in Asia. And we said, oh, yeah, but they're going to have a lot of cheap mobile subs. Well, 30% of the subs in that 86.8 number are $1 or less coming out of India. So you got to put that against what their total revenue is, and it brings it down quite considerably. You got to look what they're doing in the U.S. That's a big global number, but they're doing about 35 million in the U.S. They've been at it a year. Peacock's been at it a few months, and it's at about 26 million. So you gotta dissect these numbers. Disney does a wonderful job with presentation and a wonderful job showing how their brand plus distribution is going to end up with some enormously valued asset. And so far, the market's been buying it. But the issue they got to focus on now, and the reason this event is all about rolling out programming, is their engagement with viewers is actually pretty low. The studies have shown that Netflix, Amazon, even YouTube have huge viewer engagement compared to Disney, which is only about 5% of streaming time. So to really get up their pricing, to really have a bright price value proposition that is going to put them in the leagues of a Netflix, they have to get much more engagement. To do that, they need much more original programming. For much more original programming, they're going to have to spend a lot more than they originally said. And that is going to have to be across Hulu, across Star, and of course, Disney+. So how much they're willing to spend is a big issue here, and that they haven't revealed so far in this event as they talk about programming.
Tom, it's Karen. Thanks for coming on today. Let me ask you, when you talk about this enormous growth and value, how do we think about valuing this? How do you value it?
Well, you know, when you think, you can't value Disney without thinking about all the headwinds involved with Disney. Disney has more opportunity than any legacy media company, but it's got much more headwind than any legacy media company because it's such a big part of the bundle. Basically, when you got to think that as we go from 100 million a few years ago in satellite cable subs down to something that's in the high mid 70s today, you're talking about $17 of value coming out of that bundle, which they're trading for subs in somewhere in the $6, if they're bundled, $13 range. That's a big trade-off. And those streaming subs are lower margin subs. So they're losing much more per subscriber as they dwindle in the cable satellite world relative to the revenue per sub they're picking up in the streaming world. And they have all the marketing costs of direct-to-consumer in the streaming world, which is a wholesale seller to satellite and cable they don't have. So you can't look at Disney as, wow, it's going to make this transition to streaming and there's no real cost to their doing so. The headwinds are huge. And that I don't think the market is focused on as much because the brunt of those headwinds, although they've been feeling them, haven't hit fully yet.
Tom, just quickly, we got to let you go, but I got to ask you this multiple choice question, which I posed to Guy as well. You're also free to break out a pen and paper. I don't think you need to, though. Disney, Comcast, or Netflix? Which do you like best?
I got to agree with the great Guy. Guy said Netflix. Netflix is in a category by itself in terms of global subs, in terms of price value perception, in terms of the rate that it's able to charge internationally, which runs circles around Disney+. Comcast next, because it has a broadband pipe coupled with content play. Disney, I'd put last.
Shepard Smith here. Thanks for watching CNBC on YouTube.